Welcome back to Operation Freedom, folks. I'm Dr. Dave Janda, broadcasting from our ancillary bunker linked to our main Freedom Bunker in the People's Republic of Ann Arbor. We're here live for you every Sunday from 2 to 5 Eastern. But don't fret, we are available 24/7. You don't have to wait till next Sunday at 2 o'clock to tune into our content. We are available 24/7 at davejanda.com with extra shows, extra content, extra guests, extra analysis, archives to all of our shows. Our subscribers are privy to my WTF show, which is a show that uses the information gleaned from my contacts I've developed over the past 35 years from behind the curtain as to what's really going on. I am going to do a deep dissection on the Durham report, and a lot of folks aren't going to like what I'm going to say about it. Needless to say, there is nothing in that report that you did not already know about from Operation Freedom 7 years ago, including, and I got a lot of heat when I brought this forward 7 years ago. Brennan, the then director of the CIA, met in the White House with Obama, Biden, Loretta Lynch, the Attorney General, Comey, the director of the FBI, and a number of other staff members, and outlined what Hillary was up to in August of 2016, 3 months before the election, right? Yet those globalist cult members continued to push the fake Russian collusion narrative for not just till the election, but for 4 years afterwards. Can you say sedition and treason? I got a tremendous amount of grief speaking about this. And I also said I was concerned about if these people would ever be held accountable. In other words, the lack of the rule of law or prosecution of the rule of law for globalist cult members. And this is not just in the political world, it's in the financial world. And my next guest, Bill Holter, is someone who has pointed out the criminal manipulation of, in particular, the precious metals markets, but in particular, in a little larger sense, the financial markets over a number of decades' time, and have gotten immense grief for his coming forward and having the courage to do so and informing the public. It's all the same, folks. It's a criminal enterprise that's focused on destroying your freedom, your liberty, your financial resources and well-being, and your health. And if you don't believe about the health part, just think about what's happened over the past 3 years. It's my honor to welcome back to our platform freedom fighter extraordinaire in the financial world, Bill Holter. A little background on Bill. After a lengthy career in financial services, Bill retired in 2006 and moved his family out of the United States. Excellent timing. Bill saw what was coming. He then returned in 2011 and currently makes his home in the great state of Texas. He joined Miles Franklin, milesfranklin.com, M-I-L-E-S Franklin.com, as an associate rater in 2012, posted commentaries, and now is a precious metals broker at Miles Franklin, and also has his own site with incredible insight, Bill Holter, H-O-L-T-E-R, BillHolter.com. Bottom line, folks, Bill is one of the best forensic economic analysts on the planet. It's my honor to welcome back the great Bill Holter. Bill, welcome back.
Thanks for having me back, Dave.
Hey, so Bill, do I have this wrong, that the rule of law is broken, whether it's related to the political puppets or whether it's the financial puppets?
Yeah, the rule of law, I mean, you've seen the rule of law dwindle for many, many years. And the rule of law is only half of being a banana republic. The other half is once you get to a level where your debt exceeds your GDP. And the U.S. right now is, call it 125% debt to GDP. The rule of law is gone, and thus a banana republic.
So it came out this week, Bill. U.S. now spends more servicing its debt than on national defense. Thanks to rising yields, the U.S. government now has to spend more each year on servicing its immense debt, D-E-B-T, burden, that actually leads to death, D-E-A-T-H, debt burden, than it spent on national defense in 2022. Bill, it truly is a financial and political banana republic.
Yeah, and this is something we forecast was absolutely going to happen, is that as interest rates were rising, the amount of debt or the amount of interest that's got to be paid increases. And the game for so many years was pile on more debt but lower rates so your debt service doesn't go up. Well, we got down to 0%. You can't go below zero and have a credible currency. Now rates are going up and the amount of interest has exploded. And what you mentioned, the amount of interest that the U.S. pays is more than they pay each year to fund the military. The rest of that story is the U.S. military is funded with more than all of the militaries combined, the rest of the militaries combined on the planet.
And actually, General Flynn just spoke about the fact there was a new IG report that shows that, hey, guess what, Bill? $3 billion with a B, $3 billion, and this is the tip of the iceberg, but $3 billion in the Pentagon expenditures sent to the Pentagon is, of course, missing. And they have no idea where it's at. Not 3 million.
3 trillion,
not 30,
not billion.
3 billion.
No, 3 trillion.
Yeah, right.
No, it is. It's
no,
with
over
not
time.
a B.
But this isn't just the last allocation going to Ukraine. They can't, in the Pentagon itself, they can't even trace it in Ukraine. But in the Pentagon itself, that was sent to the Pentagon most recently, they can't find $3 billion. And you're right. Skidmore and Fitz have talked about the fact that $3 trillion over several decades' time is gone.
Yeah, and isn't it funny, Dave? Think about this. September 10th of 2001, I forget who the defense secretary was at the time, came out and said 2.3 trillion was missing. The next day was 9/11, and we never ever heard again about the 2.3 trillion.
That was Donald Rumsfeld.
Donald Rumsfeld, right.
Yeah, exactly. And by the way, where that part of the Pentagon went down was the part of the Pentagon with the Office of Naval Intelligence, right, that was working on trying to ascertain where that money went, right?
Right, it was the accounting department.
So, Bill, that brings us to this debt ceiling negotiations. Okay, from this morning. Debt ceiling negotiations crumble. McCarthy and Biden to hold a Sunday call and a meeting on Monday as impasse intensifies. Bill, I look at this and I'm like, really, this is all kabuki. Am I off?
Yeah, it is kabuki, and I think the grand plan at some point is for the U.S. to default.
Mm-hmm. Yeah, they're not looking for a solution here, are they, Bill?
Well, no, because they understand mathematically they're so close to the edge. I mean, think about this. The U.S. cannot open its doors the first day of the fiscal year without being able to borrow $1 trillion to $2 trillion to fund the deficit.
So as they get closer to, they're already over the edge. It's like a Wile E. Coyote cartoon, right? They're over the edge, and they're just waiting to plummet to the bottom of the canyon, or we are financially plummet to the bottom of the canyon as they're held mesmerized in thin air. Bill, many people contacted me this week and said, look, this whole debt ceiling negotiation thing, and it doesn't look like anyone wants to solve this thing, and we're way over our skis and our debt, 32 trillion, and we spend more servicing the debt now than we ever have. And if you just look at this data, housing starts are down, leading economic indicators are down for 13 months, retail sales are down, Home Depot is down, and they're blaming the fact that the consumer is faltering. And people say, well, wait, the what's held up over time are physical precious metals, gold and silver. Why were they getting plastered this week? And my response, and tell me if I'm off on this, Bill, is I said, don't confuse physical precious metals with the paper precious metals that's all smoke and vapor. Okay, Bill, what's your answer?
Basically, I mean, it's been the game all along, is when you see these waterfall events, when they hit the markets with paper contracts to push the price down, they're basically trying to prove to people who are watching the markets, dollar good, gold and silver bad. Just remember, the problem now, or the problem going forward, is the fiscal health of not only central banks but sovereign treasuries. So we're bringing the word insolvency into it. Gold and silver are the only two monies on the planet that cannot bankrupt. All the other currencies, because they're all debt-based, once the debt collapses, then the currencies collapse. And your result, or what you'll see, is hyperinflation, because the currencies will not buy what they once did.
And Bill, when we look around the world, the central banks of the world, sovereign entities, Russia, China, India, Malaysia, Turkey, add them all up, they're all buying physical gold and physical silver. Correct?
Right, those are non-Western sovereigns and central banks. The G7, they're not buying, they're not buyers of gold. And they're not buyers of gold because they don't want to create a bigger supply and demand problem, which will then be reflected on their currencies. The Eastern nations are buying gold as a way to move themselves away or out of harm's way of the dollar / Western finance.
So, Bill, play this out over the next several weeks. What's your take of what's going to happen?
There's so many moving parts. I mean, obviously, you've got the debt ceiling negotiations, and it's actually stupid debt ceiling negotiations. What is that, like a family on a Sunday night? They sit down and decide whether or not they should raise their credit limit. I mean, it doesn't work like that in the real world, but it does work like that with the sovereigns. It's really hard to say, to give you a forecast over the next few weeks. But all I can say is there are so many things that are converging at the same time. You've got the debt limit. You've got banks in trouble left and right. The regional banks, they're losing deposits on a daily basis. If you look at money supply is actually contracting, and that's never happened other than during the Great Depression back in the 1930s. I mean, you can look at the stock market. The averages don't show the story because the breadth of the market, you only got a handful of stocks that are pushing or holding the market up, whereas the soldiers are dying and the generals are still standing tall. It's just a question of when the generals fall over.
So as the generals fall over, what we have found over the past 5,000 years is that physical precious metals, gold and silver, can be found to be one of the best, if not the best, insurance policies on the planet, as you said earlier, Bill, because there's no counterparty risk to them. They have no debt, DEBT, associated with them. So, Bill, as I mentioned in your introduction, you are on the ground on the physical metals market side of the equation. So what are you seeing on supply and demand and premiums?
The supply of gold at this point seems to be relatively okay. Silver is definitely tight. I mean, look at the premiums. Even 100-ounce bars, you're looking at $3, $4 over spot. Eagles, you're talking $16 over spot. Junk is $10 over spot. I mean, think about in the case of an eagle. So you've got spot at $24, $25, and then a $16 premium on top of that. That's an 80% premium. It's absurd. The supply of silver, because it's such a small market, silver is the canary in the coal mine, and it's ringing a bell saying, the market's tight. And what we're seeing is we're not just over the last 3 or 4 weeks. We're not getting more orders, but we're getting bigger orders. People are cleaning their bank accounts out, in other words.
And these are not just little purchases that you're seeing.
No, these are, $500,000, $2 million. I mean, these are much bigger orders than what we experienced, say, 3, 4, 5 years ago.
So, Bill, when you look at the supply of, in particular, silver, and you've been doing this for decades, how does this compare to other times when the system was wobbling, for example, quaking, 2008, 2000, 2020?
Yeah, there really is no comparison because this shortage or period of shortage is much, much longer than any other time before. I mean, we saw, for instance, late 2008, you saw silver get smashed from paper silver, smashed from $17 down to $9, and silver was hard to find for about 3, 4, 5 weeks, and you couldn't get any under $15. So the real price never really dropped. But this has lasted for months on end now. So this is a prolonged supply and demand problem.
Bill, a number of months ago, when we deal with the globalist cult scum, they always tend to give us a bit of a heads up because they all see us, as they call us, useless eaters.
They always do.
Yeah, they see it, right? They always do.
Etiquette.
I mean, their
they
own
believe
warped
it's proper
sense.
etiquette to warn their victims.
Right. So they see us as being in the shower and they're going to flush the toilet. So several months ago, the IMF, the International Monetary Fund, a tentacle of the globalist cult, criminal banking syndicate, this is what they said. Says the world needs to prepare for the, quote, unthinkable, end quote, after COVID and the war in Ukraine. This was written by Katabala Roberts from the Epoch Times. International Monetary Fund Managing Director Kristalina Georgieva has warned that the world needs to be prepared to better handle shocks and the, quote, unthinkable, end quote, in a post-COVID-19 world and in light of the ongoing Russia-Ukraine war. So they warned us several months ago about the unthinkable. So, Bill, are we embarking right now on the unthinkable with, as you said, the debt ceiling issues coming at hand, the small and medium-sized regional banks and larger banks having significant issues, the downgrading, if you will, of the U.S. credit rate? Bill, is this the unthinkable moment she spoke about?
Well, yeah, it is, but the unthinkable moment has been thought about by many people. I mean, we've been shouted down over the years, but all these things are coming together. And just this weekend, for example, the Chinese are publicly saying that they're trying to distance themselves from the dollar because they don't want dollar risk. And at the same time, you've got the G7 conversely saying that they don't want to rely on China for the supply chain. So you've got both sides saying they kind of don't want to do business together. One because they're worried about the dollar risk, and the other because they're worried about the risk of the supply chains getting shut down. That's so dangerous, it's not even funny.
So, Bill, I've told people, and tell me if I'm off on this, that we're one communique away from a Russia-China joint communique saying that they are backing their currencies with physical assets such as gold, silver, oil, natural gas. We're one communique away, which contains that information, away from a dollar implosion. Am I off?
No, you're absolutely correct. I mean, once they make that announcement, gold and silver will become unobtainium. In other words, you're not going to be able to get them. And I would imagine that'll be within 24 to 48 hours after that announcement. There will be no gold or no silver to be had for fiat currency.
And is it a stretch to say that the U.S. dollar, of which no one will want at that point, will become so plentiful that it causes a hyperinflation on our own shores?
Yeah, no, that's absolutely correct. The dollars that are outstanding, the euro dollars, that's the market. The euro dollars will come crashing back to the United States. It will flood us with dollars, and that'll create an inflation we've never seen before.
Which might be categorized as, quote, the unthinkable, end quote, right? Not by you, not by me, not by hopefully most of our listeners, if not all of our listeners, but by 99% of the American public, right?
Well, yeah, it is it's the unthinkable, because the standard of living will completely crash. The standard of living will collapse because your savings will become worthless. You've worked, if you're 40, 50, 60 years old, you've worked a lot of years, you've saved capital, but you saved it in dollars. And the U.S. dollar is no different than any other fiat currency in history that's blown up. And when they blow up, it's hyperinflation, and the standard of living completely collapses.
Bill, there was a book written called The Money Spiders by Jim McCarthy. And here's a quote from him. And this is actually something that you've been saying for decades, but here's what he says, quote, "Sneaky and underhanded, the Federal Reserve has been sucking the lifeblood out of the United States since its inception in 1913. Like a black widow spider, it weaves a web of corruption and deceit. Unknown to its prey, the Fed's bite is poisonous, deep, long-lasting, and brings financial upheaval and misery to Americans," end quote. That sounds a lot like Bill Holter over the past couple decades, Bill.
Well, yeah, that's correct. But the only thing I would add is that it happens slowly until the very end, which is like a light switch. And it happens slowly so that no one really notices it.
So, Bill, in our last 2 minutes, educate our listeners on what you believe is their best, and you've said it before, but it bears repeating, the best way they can protect themselves from the unthinkable.
Well, you just want to become as self-reliant as you possibly can. You don't want your life to depend on someone else's performance. Your life needs to depend on your performance, which means you need to prepare for services to go down, for police services, fire services, electricity, water, you name it. When credit shuts down, everything's going to shut down, and whatever you have is all you're going to have. It's not like you're going to be able to go to the store or click on your computer and order from Amazon and have stuff here by Wednesday. All of that is going to go away. From a financial standpoint, you want to get your capital out of the system. If you own stocks, you want to get the certificates and have them issued out to you. You don't want to own bonds, and you do want gold and silver because they cannot bankrupt.